Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, and we're at the 14th of June, 2021, right at 6:30 p.m. Before I get going in any manner, tomorrow we're back on with our live webinar called What's Up? So in that What's Up, you bring your questions on spiders, ETFs, stocks, futures markets. The chart symbol has to be given to me. When you give it, I'll bring it up on my desktop. You'll see it. I'll read your question, and away we go. It's very fast-paced. It's only 15 to 20 minutes long. That's by design because I'll do one or two a week. I do not post them on the website, so you either attend or you miss it. You'll see all through this video, this link here. Click on that, register, join. It opens at 12:15. First come in, first served, in the sense that the seats are limited, and after that you'll write me and say, I couldn't get in. Well, the reason is the seats were all taken. If you register and don't come, we keep a list of that, and you can be blacklisted. So you want to register only if you're coming and then come in. We try to cut it off at a point where it works out pretty well. I haven't had too many complaints. Okay, so the big elephant in the room for Wednesday is the FOMC announcement of the monetary policy along with the press conference by Jay Powell. We know already, I was watching Paul Tudor Jones, who, you know, everybody should know who he is, and he's a very important investor. He thinks that if the Fed doesn't do something, it's the all-go signal on inflation. I read stories today from Van Eck and others talking about not that this, what we're in right now, is reminiscent at all of a recession, but rather it goes back, you got to go back, they think, maybe 40, 50 years into the 70s to see when inflation started picking up and the Fed didn't fight it. Those were the years of Paul Volcker and the like, and you might want to read what happened back then. I don't know. I'm giving you the different parts of it. I'm a chartist. If that's what's going to be, I'll see it. We know that crude oil's already there, but you've given up 40% in the lumber. You've taken copper down over 10% from the 490 into the 450 or 440 range at this point. Grains have simply crashed. You heard what I said, crashed. They've just literally come apart. So is that inflation going to hold, or was that the pop, the washout, and then we go again? That's what traders want to find out. Stock market, a little bit of everywhere, as you can imagine. Once burned, I got that in the last corn report. I told traders today that follow me in stock indices and energies. We've had a very good run in those two markets. Maybe it's time to go to cash, take a look at the report, and we can always get back in or try to. But turning a profit into a loss, that's never fun. On the weekly area chart of closes, you're all the way here staying over this red line, which is the 18-week average. The bias stays up. When you take a look at the chart action here, notice how all the action keeps shrinking in. You had this one day of volatility, and now you've shrunk in again. That is fear from what's going to happen here, so the volatility comes out. But these are highs. These are new highs on the market. There's nothing bearish on that. And even the swing lines with it, higher lows, higher highs, bullish. The market's over the 18-week average of closes. Bias is up. You haven't been able to get up to the upper Bollinger Band. I get it. You don't always do that, but you have hit key window envelopes, and you still are embedded. So why come out of these markets? I'm not telling you to. I'm telling you what I told my investors. Or subscribers is really the best, the right word for that. And it's simply this. This is the type of setup where if you get it wrong, you get hurt. And if you have to come back in, hey, there's always another, it's a schedule. There's always another train, bus, airplane, whatever it's going to be. All right, in the NASDAQ, you're right up to the upper Bollinger Band with an embedded reading. All right, that's the first time you're there. That's where I think the pros today took money off the table. In the Dow is only one not embedded. You'll see higher highs, lower lows, no trend, bias down, caught in sideways action here. So the rotation happened again. It was the Dow that was kicking the market up for a while. Now it's the tech stocks again. Okay. Russell still with an embedded reading, hasn't lost it at all. Unable to make it again to the upper Bollinger Band. Okay. Again, I'm going to take another look at the market. That'll be after all these reports Wednesday or maybe Thursday morning. Maybe if something big happens, I want to see how Asia and Europe react. In the VIX cash, haven't been able to make it to a lower Bollinger Band for months on end. Yet, this is a market that lost its embedded reading, went back to the 18-day average, and now it's just sort of searching for the new thing to do. As long as it's oversold, it's difficult to get short those markets. I do not believe that an oversold condition attracts new selling. In the bond market, well, you're going to break away from that upper Bollinger Band. As sure as I'm talking to you, you don't just keep going over them. It's not how the algorithm works. So the pullback makes sense. You lost the embedded reading right here. You can see that happened today. You haven't gained it back early on. Could be headed back to the 157.30, the 100-day average, maybe even the 18. But if interest rates go up, that's pretty negative, the stock market typically. So unless you turn around and embed during the course of the day by the close tomorrow, that's a big sign the market's run out of momentum. What about in the 10-year? Same thing. You lost it, and let's take you right here. This is Friday. Look at today. That's a big loss in it. You haven't gained it back. I think you're coming back to that. So I was watching this whole combination today going, I don't know. Traders have had an easy run. Maybe it's a place where you take money off the table and you settle back. It is summer trading. Maybe it's time to be a bit more cautious. In the dollar index, do you ever buy an upper Bollinger Band? I certainly don't teach that. Do you come out of longs against it when you're overbought? Absolutely is what I tell traders. So you can go higher, I don't know, but you're fighting a battle right there to run into a lot of resistance. And in the euro, it's the mirror. You're the flip-flop. You went down to the lower Bollinger Band the past 2 days. You're holding it in an oversold condition, unable to push through. Currencies are also caught in that funk. They want to see what the Fed says, because then it tells you what other banks might follow suit down the road. Right now, the way that I saw all the economic data going into this, I see that what I call that sweet spot. We have economic growth in terms of jobs, not running, but growing each report. The next thing I look at is inflation, definitely running on the hotter than the colder side. I don't see prices of anything going down. Look at used cars. They're dramatically higher. You know that. Home prices higher. So while you get these few breaks in grains in the lumber market and the others, the bigger price of everything hasn't dropped. And that is the big problem that we still have. British pound, a lot of resistance at 141.53. It's almost like a climax. The Brits today said it's going to be a 4-week delay due to the Delta version of the COVID. But now the market's at the support. I think the pros are coming out of their shorts right here. I think it's built into the market. Bitcoin, Elon Musk kicks the market. He just says anything, and the market goes up. So what did he say yesterday? Oh, I'm going to take, or Tesla's going to take now Bitcoins as soon as the miners get to 50% green energy usage. So if they can use solar, if they can use thermal, if they could use wind energies, just don't use fossil, 50% will take Bitcoin again. Being Tesla will take it. It's all the market had to hear, and away you went, for whatever reason, up 6.5%. Again, this thing just runs on the craziest news. It's like a meme stock. It just goes. Brent versus WTI crude. Maybe that $2 level was about it. You're starting to get a bit of a bounce here. The market is still fully embedded in the Brent until you get that red line under 80. At that point, I'll look for a correction. I am bothered that while it's crept higher, it refuses to go to the upper Bollinger Band. Bulls are still, though, in full control. Same thing in WTI. Again, I'm bothered that you can't get back up to those numbers. Enough. I've had traders that have to be very happy with what I'm going to write them tonight. Gasoline, I've moved to the August. That's where the volume is taking place. As you can see here, on Friday, the market lost its way. Now, when I was looking at the June earlier, and that lost its embedded reading, You can see here you lost it today in that. So where's the market headed? Maybe back to the 18-day average. There was some articles today that maybe the refineries are producing too much gasoline, hoping for more demand than they're going to get. I don't buy into that story. I think Americans are going to drive like there's no tomorrow all summer. We'll see if I'm right or wrong as we get towards July 4th. And then if they keep getting too much, well, then you hit a peak point. It'll be in August some point, and then you drop away as the kids go back to school this year. We're going to get back to normal. So I want to remind you, I hope you come in tomorrow. If you don't have your invite from me for any reason, you can sign up right here. Just click on the icon that's been on all show. Sign up at that point. I'll open the gate for the live webinar. It is free at 12:15. It'll start promptly at 12:30, and it'll be over around 12:50. I'm Ira Epstein. You have a great day. Hope to see you tomorrow.